what makes it interesting as money is that if you're trying to move money globally, right? If you try to bring gold through an airport, try to bring physical cash dollars through an airport, you're going to get all these checkpoints, all these ways to stop you, capital controls. The interesting thing about Bitcoin as a technology stack is you can memorize 12 words in your head, and you have like your slot on this decentralized cloud of money that you can then go around the world and eventually reconstruct your ability to access that, right? Or you can just send it to people, peer to peer in a way that it's challenging to stop. There are regulations and things that can try to slow it down around the margins, the fiat on and off ramps, but the actual network itself is rather interesting and kind of offers novel characteristics that a lot of other monies, basically haven't been able to offer.
The world of cryptocurrency is constantly evolving, and one question that persists is whether or not Bitcoin is truly money. While its adoption as a global currency continues to grow, concerns about its intrinsic value and the potential for mass adoption remain. Recent scandals in the crypto industry have sparked even more debate about whether or not the emperor has no clothes. Kitco News recently hosted George Selgin and Lyn Alden, two economists who will be going head-to-head in a live interactive discussion about this very issue. Selgin, a senior fellow and director emeritus of the Cato Institute's Center for Monetary and Financial Alternatives, has publicly stated that Bitcoin does not meet the economist's standard definition of money. Standing in opposition is Lyn Alden, the founder of Lyn Alden Investment Strategy. She is a proponent of Bitcoin as a form of money and medium of exchange and is an accomplished macroeconomist. Her expertise and calls in the economy have earned her a reputation as a respected voice in the investment community. As the debate began, George Selgin presented his argument that for something to be considered money, it must be easily and widely accepted in exchange, and that in most places, Bitcoin is not yet at that level of acceptability. He stated that while Bitcoin has made gains in acceptability since its introduction, it has a ways to go before it can be considered money in most places. On the other hand, Lyn Alden argued that Bitcoin is on the rise in terms of acceptability and scalability compared to other non-fiat currencies. She maintained that despite the gap between Bitcoin's acceptability and the number of merchants who will trade for it, it is on its way to becoming money in more places in the future. Both economists also presented their perspectives on the intrinsic value of Bitcoin, with Selgin raising concerns and Alden stating that the value of Bitcoin is determined by market forces just like any other asset. It's important to note that Bitcoin is increasingly being used as a store of value similar to gold. This is especially true in countries experiencing hyperinflation and currency devaluation, where Bitcoin acts as a hedge against monetary instability. Will Bitcoin prove to be a true form of money, or will Selgin's skepticism be proven right? We will now get into the video to find out about this exciting debate between two prominent voices in the economics world. Make sure to like the video, subscribe, and drop any comments and questions you may have in the comment section.
Now, the test for whether something's money is therefore whether you can go shopping with it with low search costs, where you can pretty much go into any shop or online these days, and whatever you're looking for, if you're equipped with this stuff, the seller is going to take it. My point about Bitcoin is very simple. It's that in most places, the vast majority of sellers aren't going to take it from you, or to put it perhaps a little bit more cleanly, there's something else, some other asset that they are much more likely to accept. And these days, that's usually whatever the local fiat money is. And just one more point. Now, what Lyn said was that Bitcoin is high on the salability list relative to all the other non-fiat currencies that are in use in the world. In any particular place, it's high on the list of alternatives. And that's true. But that still can be consistent with there being a big gap between its acceptability and the number of merchants, sellers who will trade for it, and the number who will trade for the local fiat money. So in that sense, these two tweets are reconcilable.
Okay.
Finally, I do think Bitcoin has made a lot of gains in acceptability, certainly since it was introduced. So my statement doesn't necessarily exclude it becoming money in more places in the future.
Okay. Lyn, I'll give you a chance to respond.
Well, I think probably along similar lines that I don't really disagree with anything that George said, at least in that description. And the way I'd phrase it is that, as you put it, basically you want to solve the barter problem. And the shortcoming of fiat currencies is that you only solve the barter problem in a local sense, right? So for example, in Egypt, Egyptian pounds solve the barter problem. It's a widely accepted medium of exchange there. But if you're in Canada, Egypt pounds are a terrible medium of exchange. Basically, they're only money in Egypt, maybe a couple border countries, you can get some degree of salability there. And the salability rapidly falls away outside of the local monopoly. So when you have 180 different currencies, I think something like 130 of them are free floating. The other ones are pegged, and therefore, pegs can break. You basically have a barter system globally, and only a handful of monies that basically tie them together. You have the global reserve currency. It used to be British pounds. Now it's dollars. You have gold coins. If you bring a gold coin with you, you can pretty much go anywhere. And my argument is essentially that if you look at, in a global sense, global bearer assets, what are the top 10 monies that you could bring with you that would be among the easiest to either get a vendor to sell you something for them, or at least that you could then convert into the local system fairly easily, right? So for example, I have Norwegian kroner and Egyptian pounds in New Jersey, and basically they're less saleable here than Bitcoins, for example. And that's true for a lot of places, suburbs and urban centers around the world, even though, of course, they're both highly saleable in their host jurisdictions, which is essentially an artificial monopoly. But that's the current technology stack that the world uses for lack of something better. And so my overall view is that, and it doesn't really disagree with George in that sense, is that it's an emerging money. It's not as saleable as, say, gold coins or physical cash dollars globally, for example. But I would say that the trend is very much up, and that it's already, you can look at, again, there's 180 fiat currencies, and then a bunch of other commodities. It's in the, I'd argue, the top 10, even after only a 14-year lifespan, let alone having a good.
As the adoption of Bitcoin continues to grow, concerns about its intrinsic value and the potential for mass adoption remain. According to CoinMarketCap, the total market capitalization of all cryptocurrencies exceeded $2 trillion in 2021, with Bitcoin accounting for about 60% of it. This tremendous growth has sparked more debate about the potential of Bitcoin as a new form of money. Selgin argued that Bitcoin does not have the property of being good money, in the sense that it can't easily be accepted by another party in exchange for a commodity or another product. Alden responded by saying that even though Bitcoin doesn't have the physical properties of money, it still maintains a market value property of good money, and as adoption and scalability increase, it will come to be generally accepted just like gold and silver. Let us now hear what they had to say.
Being money is a market phenomenon. Money is a market phenomenon. That is, whether something's money or not is not a function of what its physical characteristics are. It's a function of what people do with it. And therefore, when we want to know if something's money, we can't simply look at it and say, well, it's got this physical feature or that physical feature. It's capable of this, capable of that. We must ask, who is doing what with it? And particularly, we have to ask, how easy is it for you to walk into the store next door and buy what you want, offering this stuff? That's a market characteristic, not a physical characteristic.
The way I would phrase it is that, so I agree with that, but I would say that the physical characteristics eventually dictate what the market does with it. For example, shells were money back when, tribes had similar levels of technology, and basically nobody could cheat the system. But once someone comes and invents metal tools and, industrial revolution, anybody who's still trying to use shells as money is going to have a really bad time, because there's other people that can then rapidly expand the supply of your money, and you're going to get wrecked essentially. And so, properties eventually dictate market use. And so that's why you want to both take into account the properties of something, but then also identify, you look for market signals. Is this thing actually being used as money? Is the trend higher or lower? What is current relative value compared to money? And so, that's why a Picasso is just never going to be a very good form of money, because even though it's a store of value, it's intrinsically rare, it's interesting, but it just lacks good properties to be any sort of medium of exchange, any sort of fungibility, any sort of liquidity. Basically it's not a saleable good. It's, buying something like Picasso is a very challenging process. Getting it authenticated, finding a wealthy buyer, it's a very challenging process. And so I would essentially describe that money is is, basically a ranking of saleability of different goods, and properties heavily dictate what is in practice a very saleable money. And then it just becomes a matter of, more and more market participants realizing its properties, testing its properties, seeing how those properties hold up. And then different technology trends over time can potentially break the saleability of some sort of monies. That's kind of been the history of commodity monies. That's why gold's kind of the last one standing. That's the one that we just don't know how to make more of in any sort of like rapid pace. Whereas shells, beads, furs, cattle, salt, we can make all these things pretty rapidly, and we can sharply change their stock to flow ratios. Whereas gold and to a lesser extent silver hold up a lot better in that regard. And so Bitcoin, I think, has the properties of being good money. And then in a market sense, as we discussed earlier, it's got pretty good saleability, especially when you look at it in a global sense.
Both Lyn Alden and George Selgin presented compelling arguments, leaving the Bitcoin and non-Bitcoin community with much to think about. It's clear that the question of whether or not Bitcoin is truly money is far from settled. As the world of cryptocurrency continues to evolve, it's important for all of us to stay informed and continue to educate ourselves about this exciting but complex topic. One thing is for sure, the debate between Lyn Alden and George Selgin has sparked a valuable conversation about the nature of money and the role of cryptocurrency in our economy. It will be interesting to see how the acceptance and use of Bitcoin develop in the coming years. What's your opinion on the debate about Bitcoin? Do you think it's true money or just a speculative asset? Join the conversation and share your thoughts in the comment section below. Don't forget to like this video, subscribe, and turn on notifications. Thanks for watching.